I never thought I would sell out of my SCHD position, but here we are. Today I'm going to be breaking down why I sold out of my SCHD position, what I'm investing in instead, and whether you should do the same or not. Is SCHD still worth holding? Well, let's find out. Before we get into why I sold, let's quickly cover YouTube's favorite dividend ETF, SCHD. So, Schwab's US Dividend Equity ETF is an ETF with its focus being on high quality dividend paying stocks. Currently, SCHD is yielding around 3.5 to 4%, and its goal is to consistently grow its dividend over time. Some of the top holdings are companies that we all know and love, such as Coca Cola, PepsiCo, Chevron, Texas Instruments, Home Depot. Besides SCHD's consistent dividend growth, they also offer a really low and competitive expense ratio of just 0.06%. This means that for every $10,000 you have invested in SCHD, you will only be paying $6 to own the asset, which is way below other competitors. Even VYM is at least 0.10%, which is $10. And over time, these expense ratios can make a huge difference in your portfolio. I originally got into SCHD for a few key reasons, and if you own it, you probably know why. So SCHD, like mentioned, offers a strong dividend growth and yield. Who doesn't like to get paid out every single quarter by their assets and see that payment grow year over year, right? And next, I get exposure to high quality companies. All of the companies within SCHD are high quality companies that have been around for a long time and have a track record of paying dividends on time and consistently growing their dividend yield. Finally, owning SCHD is kind of like a hedge against the recessions. So when the market is in a downturn, SCHD will tend to perform better than the S&P 500, but when the market is ripping and is going up, S&P 500 will tend to perform a lot better than SCHD. So if SCHD has all these benefits, why would I sell out of it? So there's a few key reasons that made me rethink my decision of investing in this asset. First off is the lack of tech exposure. Now, this really builds into the second point as well. It's just in general that tech will yield higher total returns over time compared to SCHD. However, the downside with tech is that when we're in recessions, tech will perform significantly worse than SCHD because SCHD is more recession proof and it will continue to pay you dividends even if the stock market trades sideways for the year. So, like I said, this first point really goes into my second point, which is that I'm concerned with its performance, right? I'm a young investor and I'm willing to front up that extra risk currently, knowing that I have a long time horizon and that I can endure a volatile market over the next couple years to receive those extra total market returns, right? This is why I'm fine choosing to shy away from SCHD and instead go for higher total returns over a longer time frame, right? And then the third reason, I guess you can say, is dividend tax implications. Although this isn't too big of a reasons, but everyone hates their taxes, so why not keep mine as simple as possible? Now that I'm out of SCHD, where am I going to put my money instead? Well, here's what I'm buying. So, personally, I like my ETFs because they're diversified baskets of funds and they tend to have lower risk. And now, while some ETFs will have lower risk than other ETFs, I just believe the diversification in ETFs overall helps you keep a balanced and healthy portfolio that avoids too much investment into a single stock. So, in order to in order to, I guess, support why I decided to switch out of SCHD to these other ETFs that we're going to talk about, we're going to look at some performance back testing over the past 10 years or so. Right, so we're going to compare SCHD, VGT, QQQ, and the Vanguard S&P 500, VOO, right? So if we scroll down here and we look at the results, I'll head over it like this. We can see this bottom line over here is SCHD. Then the one after that is the S&P 500. After this, it's QQQ. And on the top, the light green is VGT. So what we see here is that whenever there are recessions, for example, in 2022, the dip off in, for example, VGT was way more significant than the other three ETFs. This is again because heavier tech weighted ETFs will have harder downturns. Even here, we can see that the big drop off by QQQ and VGT is way more significant than VOO and SCHD. That's because VOO and SCHD tend to be a lot safer and are more resistant to recessions and pullbacks in the market. However, like I mentioned earlier, since I'm such a young investor and I have at least 40 years or so in front of me in my time horizon, I don't mind writing out this variance. These pullbacks, they don't scare me because if I look at the results over time, I can see that VGT, QQQ, and even the S&P 500 will all outperform SCHD. Now, coincidentally, VGT is my biggest holding that I currently have in my Roth IRA, and I invest into it on a weekly basis, and I don't see that changing anytime soon because, as mentioned before, I like having a heavier tech weighted ETF in my retirement account because I will let it ride and let these gains accumulate over time. As we discussed, here we can see that we have the different returns over time, right? So over a 5 year period, we have SCHD averaging about 15% annualized return. VOO is about 16 and 3/4. QQQ is about 20.5%, and VGT is 21.5%. And while even these small percents between SCHD and VOO being only 2%, over time, when compounding is applied, that 2% makes a big difference in your end result in your portfolio. So this is why I sold out of my SCHD position. Don't get me wrong, it's still a super solid fund, but it doesn't fit in my personal wealth building plan. I personally wanted to have more growth exposure, and that's my choice because at the end of the day, personal finance is personal. So you should do what works best for you. Now, drop me a comment, guys. What do you think of SCHD? Is it a buy? Is it a hold? Or are you selling out of it? If you found this useful and want more investing content, please like and subscribe. I'll see you guys later. Take care.